Warren Buffett was not born into a rich family. He did not get a big inheritance or find a stock that made him rich overnight. When he was 11 years old, he bought his first shares in a small oil company. That step made him excited about money and business. As a teenager, he tried many ways to earn extra money. He delivered newspapers early in the morning. He sold used golf balls to people who lost them. He even bought and ran a few pinball machines, placing them in barbershops and laundromats. He worked hard to earn every dollar, but he did not just spend what he made. He saved it and used it to buy more stocks and businesses. Over time, his savings and smart choices added up. By the time he was 30 years old, he had more than $1 million. That may not sound like much now, but back then it was a huge sum. That million was the start of a much larger fortune. His early success taught him that time and patience matter. He learned to read financial reports and business news. He paid attention to numbers and facts every day. Compound interest. Compound interest is a strong way to grow your money over time. It means you earn interest on your original investment and on past interest. For example, if you invest $1,000 at 10% per year, after 1 year you have $1,100. The next year you earn 10% on $1,100 and so on. Over 30 years, that small amount can become very large. Buffett began investing early and let his money grow for decades. He called compound interest the eighth wonder of the world. The lesson: start investing as early as possible and let time work its magic. This effect grows stronger over time, so the longer you keep your money invested, the faster it can grow. Start today, stay patient. Avoiding debt. Buffett also warns against debt. Debt often has high interest rates like 20% on credit cards. If your debt costs more than your investments earn, you lose money. Buffett says the first use of extra cash should be to pay off expensive debt. Once you clear debt, you can invest more of your income. Avoid borrowing for things you cannot afford. Staying out of debt frees up more money to invest and speeds up your path to wealth. Investing in what you understand. Buffett only invests in businesses he understands. He avoids things like Bitcoin, NFTs, or meme stocks because he does not know how they work. His rule is to never put money into a business you cannot explain in simple terms. He looks for companies with clear products, good management, and a long history of profit. That is why he buys stocks in companies like Coca-Cola, Apple, and American Express. These businesses make real money, have strong brands, and will likely last for many years. Before you invest anything, ask yourself, do I really understand how this business makes money? If not, stay away. Focusing on long-term value. He also focuses on long-term value, not short-term trends. He does not chase the latest craze or try to time the market. Instead, he buys solid companies that he believes will be strong decades from now. He studies a company's competitive edge, leadership, and earnings history. Trends come and go, but good businesses can last. If a company looks good now but has no plan for the future, he avoids it. He thinks about what the business will be worth in 10, 20, or 30 years, not just tomorrow. If you want to build lasting wealth, focus on fundamentals and avoid hype. Patience. Patience is another key to Buffett's success. When the stock market drops, he buys more shares. He knows that market dips can offer good deals. His rule is to be fearful when others are greedy and greedy when others are fearful. Many people panic and sell when prices fall. Buffett stays calm and looks for bargains. He holds on to great companies for decades, letting them grow. The stock market moves up and down, but his focus on long-term value has made him billions. Remember, the biggest rewards often go to those who wait. He doesn't check prices every hour or day. Instead, he gives his investments time to work. Over years and even decades, small gains add up to huge results. Ownership mindset. Buffett treats every investment as if he were buying the whole business, not just a few shares. He says, I am a better investor because I am a businessman, and a better businessman because I am an investor. This mindset helps him make clear decisions. He asks, would I still want to own this business if the stock market closed for 10 years? If the answer is no, he moves on. Think like an owner, not a trader. This view helps you avoid quick trades and focus on lasting value. As an owner, he cares about the company's people, products, and profits. He looks for businesses with honest managers and simple ideas. By treating shares like real ownership, he stays steady through good and bad times. Frugality. Even though he is one of the richest people in the world, Buffett lives simply. He still lives in the same house he bought in 1958 for $31,500. He does not drive a fancy car or own a private jet. He often eats at simple restaurants. He believes that growing your money is more important than showing off. He says, if you buy things you do not need, soon you will have to sell things you need. Smart habits, not a high income, build real wealth. He watches prices and looks for bargains in his personal life too. Saving on small things frees up money to invest. Simple living gives him more time and energy to focus on his work. Daily learning. Learning is a daily habit for Buffett. He spends most of his day reading books, annual reports, and news. He says knowledge compounds just like money. The more you learn, the more you earn. Most people stop learning after school, but Buffett keeps growing his knowledge. He studies industries, market trends, and business models. If you want to think like him, spend at least 30 minutes each day learning about business or investing. Read books, listen to interviews, and study real-world examples. He asks questions and stays curious about how things work. By learning a little each day, you build a big edge over time. Even simple articles can teach you something new. Multiple income streams. Buffett also built many income streams. As a young man, he delivered newspapers, sold stocks, and started small businesses. Today, his wealth comes from the companies he owns, stock dividends, and smart investments. He says relying on one paycheck is risky. To be financially secure, find ways to earn from different sources: side businesses, investments, or real estate. Multiple streams of income can protect you if one source slows down. Influence of people. Success, Buffett believes, is shaped by the people around you. He chose partners who were honest, smart, and disciplined. His longtime friend Charlie Munger helped him make big decisions. Buffett says, "You will move in the direction of the people you associate with. If you spend time with positive, driven people, you will learn good habits. Negative or lazy people can hold you back. Choose friends, mentors, and partners who inspire you to grow." Giving back. Giving back is part of Buffett's life. He has pledged to give away most of his wealth to charity. He believes that if you are lucky, you should help others. He says giving is not only about money. You can share time or knowledge. Buffett mentors young investors and supports causes he cares about. True success is about more than money. It is about making a positive impact. Emotional control. Emotions can hurt your investment. Many people let fear or greed drive their decisions. Buffett stays calm and makes choices based on facts and long-term plans. His rule is simple: control your emotion, avoid panic, and stick to your strategy. Over time, discipline wins over quick reaction. Learning from failure. Buffett also sees failure as a chance to learn. He has made mistakes but studies them to improve. He says it's good to learn from your mistakes, but better to learn from other people's mistakes. When things go wrong, he reviews what happened and adjusts his plan. Failure is part of the process, not the end. Valuing time. Finally, Buffett values time above almost everything. He avoids meetings that do not matter and focuses on tasks that bring the most value. He sets aside time each day for reading and thinking. He says time is a resource you cannot get back. Guard it carefully. Say no to distractions, delegate small tasks, and spend your time on what really moves you forward. Most people never get rich because they do the opposite of Buffett's advice. They spend instead of save, chase trends instead of value, and take on debt instead of avoiding it. They stay trapped in a cycle of earning and spending. The good news is you do not have to be a billionaire to follow Buffett's rules. You just need to be consistent and patient. Like and subscribe to our channel for more video.